Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to discuss whether the EV bubble has finally burst or not. I have been making a video about the EV bubble in August and have been saying at that time that we are in the midst of an EV bubble, but that the bubble will grow most likely bigger until it pops. We reached the peak of the EV bubble with the CCIV merger with Lucid Motors, in my opinion. The stock of CCIV went up from $10 to above $64 in just a few weeks because retail investors were sure they would invest in the next Tesla. Most of the retail investors didn't even know the valuation of the company, but at some point the company was valued at around 100 billion US dollar. Lucid would have been valued higher than car companies like VW, Ford, or NIO, which all are already selling a lot of cars. Lucid, on the other hand, is selling zero cars until now. Even worse, the CEO, Peter Rawlinson, just came out one day after the announcement of the merger and confesses that they have to delay deliveries from the second quarter to the third quarter of 2021. Don't understand me wrong, a delay is something totally normal, but one day after the merger announcement, after screwing retail investors, is just questionable in my opinion. This delay is really a slap in the face of investors after increasing the PIPE investment and the valuation of Lucid Motors. God knows if they will come out in the second quarter and have another delay or not, but that is totally possible. So it is no surprise that the stock crashed from $64 back to $20 on Friday. This is almost a 70% decline from the top and wiped out a lot of people, unfortunately. Many are sitting on huge losses, waiting for the price to recover. I have been warning that the stock price is way overhyped and that the risk-reward ratio is totally insane and people are poised to get disappointed. But it is not only Lucid, but also high flyers like Tesla, NIO, and all other EVs that suffered big price declines. NIO, for example, declined more than 50% from its peak at around $67 to a low of $32 on Friday after bouncing back to $38 at the end. I have sold my NIO shares a while ago and also posted a video called Bye Bye NIO when the price was around $55. Many people were saying that the company would go to $100 and more, but for me the risk-reward ratio was getting more and more unfavorable. Tesla, ASK's favorite, also got beaten down quite heavily from $900 US down to $539 US dollars on Friday, which was a 40% decline. A 40% decline for an S&P company is kind of crazy in my opinion, but even Elon Musk himself said many times that Tesla's stock price is overvalued, but investors didn't believe him. Normally, when a stock price is already taking away so much future growth, there is a lot of room for disappointments and the odds for a big correction increase. An opposite example was buying oil back in October, November, where everyone said that oil is dead and that EVs would kill oil demand. No one wanted to buy oil stocks, but the risk to the downside was limited since everyone thought oil is dead. The surprise was to the upside. At that time, I have bought Lukoil and ConocoPhillips, which both are almost 100% up from that price. Unfortunately, I sold them too early, which I regret now, since the narrative changed and inflation, which wasn't a worry for a very long time, now suddenly emerged with Powell's latest statements. Warren Buffett said once the following when asked where to invest in an inflationary environment.
With those modest statements, we'll move on to Becky.
This question comes from Mark Jordan in Charleston, South Carolina. He writes, in a period of high inflation, which particular businesses owned by Berkshire Hathaway will perform the best, and which will perform the worst, and why?
Well, the businesses that will perform the best are the ones that require little capital investment to facilitate inflationary growth and that have strong positions that allow them to increase prices with inflation. And we have a candy business, for example, and the value of the dollar since we bought that candy business has probably fallen at least 85%, I would say, 80 to 85%. And that candy business sells 75% more pounds of candy than it did when we bought it, but it has 10 times the revenues, and it doesn't take a lot more capital. So that kind of a business, any business that has enough freedom to price to offset inflation and doesn't require commensurate or huge investment to support it, will do well. Businesses like our utilities, which get in effect a bond-like return, but require, if you're going to build a generating plant, it costs twice as much per kilowatt hour of capacity, and all you're going to get is a fixed return, and yields on bonds go up perhaps dramatically if you get high inflation, is not going to do that well in an inflationary period, just because it has certain aspects of a bond-like investment, and bonds generally are not going to do well in inflation.
So, in my opinion, the EV sector is a capital-intensive industry, and more companies are entering that space, which might put pressure on margins. Bankruptcies are not rare in the car industry, since it is very capital-intensive to produce them. You can't even count the list of car companies that went bankrupt in the past, some of them more than once. In my opinion, a lot of companies in the EV space will disappear over the years, and only handfuls will survive, so you have to be very selective when investing your hard-earned money. Investors might have woken up to that fact suddenly and have started to dump their EV shares. Of course, retail investors that are following YouTubers like the one with the cat, for example, were averaging down on Friday. I wouldn't be surprised if we see another small pump on Monday to get retail investors more excited, only to see a dump at the end of the day or on Tuesday. In my opinion, retail investors that are buying the dips will soon run out of cash and sit on huge losses for a long time. Please don't listen to any YouTuber, including me out there, since most of the big ones are making more money from their views than from investing. Always do your own due diligence and watch YouTube channels just for entertainment like I do. Nothing beats, for example, Larry Jones or Stockmo if you want to have good entertainment. But always do your own due diligence and don't follow blindly. So in my opinion, the EV crash isn't over yet, and even if a new round of stimulus comes at the end of March, the money will flow most likely into assets that protect people from inflation the most, which makes it unlikely that EV stocks will reach their all-time highs quickly. Stocks like Warren Buffett said have a big moat and pricing power, or commodity stocks like oil or uranium stocks will do the best in my opinion. The decline will most likely continue even further until the Fed comes to the rescue at some point when enough damage is done to the retail investor. The GME war most likely led to a retaliation by the empire, and now the retail investor is in a deadly headlock. I'm curious if the retail investor has enough strength to survive, or if he vanishes for another couple of years. My theory is that the bull market still is intact and that the retail investor still has a chance, but let's see about that. If you like this video, hit the like button to support the channel, share, comment, and subscribe for early stock picks. You can also join our Patreon for exclusive content and early buy and sell alerts. Bye guys, and see you in the next one.